going to be about all the different products you're lending, I
Okay.
guess I should say.
Yes.
When you introduced this to me and you told me this was your product sheet, someone that's just coming into this business, I was
Yes.
like, these are not tangible products.
All right. Yes.
But that's what you call the different programs that
Yes.
you're able to lend on?
Yes.
Am I saying that right?
Yeah.
Okay. So the main product we have here is basically
Commercial
the bank alternate financing.
Alternate financing. Okay. Our core product today, we're calling it alternate financing. What alternate financing is the bridge or the middle between a bank loan and a very expensive private money loan. In 2008, we used a fancy term called stated lending, which stated was literally somebody would fill out an application and they would state us what their assets were or tell us what their income was. And we would look at it, and as long as it was a good property and the credit was good, we'd be like, we believe you. You stated it, we're going to close this loan. Unfortunately, that doesn't exist anymore, and it probably won't come back in our lifetimes. True stated lending. When we introduced the product, we were calling it stated. It's a term brokers, commercial brokers know, no commercial. It's a marketing idea, message to get people to call, and they called. But we're underwriting files pretty significantly now, so stated doesn't exist. So we're calling it bank alternate. We're doing things that just the banks, because they're federally regulated, they can't do. Some examples.
Yeah.
We do the biggie. We do losses on tax returns, which a business that's probably suffered over the past couple years, which is probably how many?
A lot.
If not all of them.
Yeah.
They're going to show losses on their tax returns. Banks, and at the same time that the business owners are suffering and they've shown losses on their tax returns since the market's collapsed, what's really tough, and the reason for this opportunity and why the market's down right now, is that not only are the businesses, they're suffering, but the banks, their guidelines by the Fed are being upped. Their guidelines are getting stricter and stricter and stricter. So it's getting tough for the banks to lend, and now you have somebody who's losses in their returns. That is automatically, most of the time, a deal killer. We do losses on the tax returns. If somebody has good credit, they've been in business for years, they show cash flow, the property's a nice income-producing property, we're going to say yes. So losses on tax returns, we do up to 75% loan to value, meaning if somebody wants to buy a commercial property, they need 25% down. We actually have a new program. We're doing credit down to 600. Even 650 back in 08 was probably a B plus. 650 today is probably a D. A 600 is an F. We're doing questionable credits. So if there's a story there, we'll do credit that may not be there. No seasoning. We're doing deals with no seasoning, where if somebody just buys an apartment complex and they fix it up and now it has really good cash flow, they put new tenants in, a bank or a traditional lender is going to want that owner to own that property for at least a year or two. We don't have seasoning requirements. So somebody buys it, share of sale, they fix it up, now it has a ton of cash flow. I can refinance, give them some cash out, let them do it all over again. So these are the things. What it is it's creative financing.
Okay.
And that's what we do. Again, you'll hear me say this a lot. I'm big on catchphrases. Good loans for good borrowers is what we're doing. So those are some of the things that are what the bank alternate or alternate financing is about.
Can you explain seasoning in terms of, I take seasoning as you have to have experience?
Okay, that's a good one.
Okay.
Actually, seasoning can mean 3 or 4 different things. Let's go on yours, experience. I met with a bank the other day, and the woman says, hey, I got a client, I like this guy, he runs a lot of cash flow through our bank, he's a lawyer, he's an attorney, his wife's a teacher, they're great, they want to go buy their first apartment complex. Okay, good cash flow, credit, good jobs, make money, the apartment building's a good investment. The bank can't do it because their LLC is newly formed. So they got to wait until he has a business for a year or two. They don't have a lot of experience. I love that guy. Love him. I wanted him to go buy his first 10 apartment complexes. I could care less about his experience as long as there's a plan there. If it's a huge apartment complex, I would want a management company, which he would need one anyway.
Yeah.
He's not going to quit his job. But those are the type of things that no seasoning on the experience, if it makes sense. No seasoning on ownership, my apartment complex. Down money. A lot of banks want seasoning on purchase money. They want to know where that money is coming from or where it came from.
Yeah.
It has to be in the bank for a year before they can go buy something. That makes no difference to us. We don't need seasoning on, down money. So it can come from, an insurance policy, a will, or, it really doesn't matter to us as long as it makes sense. Yeah.
Can you explain quickly what cash out means?
Yes, cash out is really simple. Somebody owns a piece of property. They bought it for X. They've owned it for some years. There's some cash in that. There's equity in that property that they've gained. And cash out is we just do a refinance and give them cash out.
And they can use that money on
And they can use that money for just about anything. And the more cash out, obviously, we're going to start getting into use of funds of what they're doing with it. Banks or conventional lenders do not like a lot of cash out. I will do 100% cash out. So I will write somebody a check for $1 million if they have the equity there, and it makes sense. A bank will never do that.
Okay, so on this main bank alternate product,
Yes.
you have on the bottom here, there's exceptions to some of the states.
Yes.
Real quick, why is there an exception to some of those states?
Okay. There's always trouble states, and the trouble states really revolve around a lot of things. The biggie is property values. Some states just have the property values have declined so much. It's kind of they're depressed environments. So you got to be careful there. Summer foreclosure rates are through the roof. They're so high. Lenders just don't want to take the gamble of lending in an area like that. Even if it's a good loan, a good property, a good borrower, what happens around that property is very relevant. So there's going to be trouble states all the time. So that's a work in progress. We are national, but we may be adding all states by the end of the month anyway.
Okay. All right. Well, that's it for the bank alternate program, and that's the main program.
That's the main program is alternate financing.
Okay. Let's go to the easy hard money.
Okay. Easy Hard Money is a crazy new program that we come out. That it is a bridge or hard money program. Hard money is just very expensive, but it's fast. Very expensive.
How fast can you fund?
7 to 14 days on hard money, and that's what a lot of people that need private investment money is. It's for speed. It's not necessarily somebody who can't qualify for a loan, but they need that money by the end of the week to buy that sheriff's sale or that foreclosure.
Okay.
We have a hard money program with credit down to 600 that is national with unheard of terms and rates. Your typical hard money loan is going to be in the teens, 15 to 18%, lots of points, 1 year term, interest only, very expensive financing. We have come out with Easy Hard Money where it's a hard money loan but with single digit rates on a 2-year fix with a 30-year amortization, which is unheard of. National program, we just came out with that. Very, very neat program, so ask about Easy Hard Money.
So 30-year amortization, that means if they buy a building for $500,000, since that's what you go up to, you'll amortize that loan over 30 years.
Over 30 years, and there'll be a fixed period, whatever that interest rate is, for 2 years.
And then can it go up?
It can. After 2 years, it'll become a balloon where they'll have to do something.
They'll have to refinance.
They'll have to refinance it, exactly.
Okay. All right. Unlimited cash out on that too.
Unlimited cash out, yes.
Okay.
It's a neat program.
Okay, let's go to the next one, the 1 to 4 unit program.
Okay, 1 to 4 units, another exciting program. In the years that I've been doing this business, somebody would say, hey, I have an investment property, a house or a duplex or a quad. My first response is, I don't do it. I'm a commercial guy. 5+ units, that's all I do. We just came out with a commercial program that we do 1 to 4 units now, which I've never been able to do since I've been doing commercial, which is dynamite. We'll do investment properties. duplexes, quads, triplex. It's just the requirements on that really, the loan has to be to a business or a corporation or LLC. But very exciting program. It's a big niche out there because true commercial guys can't do it because it's considered residential.
Yeah.
And true residential people can't do it because it's in the name of a business or an LLC. They can't do it.
Mm-hmm.
So there's real specialty lenders out there that have been doing this. We're going after it. So another exciting program.
And that's a national program.
Yes.
It also says 65% loan to value ratio, so the investor has to put down the remaining balance.
Exactly,
in
if
cash.
it's not a refinance.
Okay.
Most of those will be refinances.
Okay. Okay. All right, let's go to the multi-use properties.
Okay, multi-use and the remainder of this,
Mm-hmm.
or I'm sorry, the middle part of this is we also offer conventional programs. We do SBA programs as well, so we do have some programs that fall into the bank category. We work with some national lenders, national banks that have these programs. Not our core product, but they have great rates. SBA allows 90% LTV, so they're really good programs, but I can tell you it's not our core business.
Yeah.
And but if you're a perfect borrower and you're looking for the best rates or terms or the highest LTV, that's the program you want to go after if you qualify.
Mm-hmm.
And it's very difficult to qualify for conventional right now, or SBA.
So on the product sheet, the multi-use, the semi-generic, special use, and the
That's
504,
all-
that's all basically bank programs?
Yes, absolutely.
Okay.
Yeah.
Okay. All right.
And then the third thing that we do, that we have access to, is we have access to hard money, private investment
Okay.
money. We have a small fund here in Philadelphia, Pennsylvania, for experts that do fix and flip, where we can do projects, get them funded within 7 days. We do have access to national hard money, but we're looking for $5 million plus.
Okay.
And that's kind of our programs. Our main program is bank alternate or traditional alternate financing.
Mm-hmm.
We do some A-paper or bank type stuff on occasion. We have access to private money as well.